Hello everyone. This combination of factors is the be all and end all for day traders. It's the be all and end all for any traders. You know, yes, you need to be able to have winners. You need to be able to take losses, but it's the type of winners and the type of losses that you take that will define your trading journey. So I'm going to tell you about these factors. I'm going to explain them to you, and I'm going to show you on the chart how one particular candlestick that reoccurs on a fairly regular basis can net you anything, any combination of numbers in your favor, really, as you'll see in a minute when I show you some example trading opportunities that have occurred today. I'm going to go through several charts just to show you where these opportunities occurred, and that's going to set up some sort of recognition system inside your brain. And I've only been focusing on these opportunities for the last few weeks. I've only been focusing on these. They don't happen, 6 or 7 times an hour, but you can find these opportunities on the various price charts pretty much all of the time. You need to nip between one chart and another to find them, but they're there and they require a definite combination of factors to occur. So anyway, let's get into it. What are those two factors? What are the two factors that are the most important factors in trading? Okay, is it win and loss ratio? No. I think you probably know what it is already. It's the reward and risk. If you're taking one-to-one reward to risk trades, it's going to take you an awful long time to make money, and just 1 or 2 errors a day, and it's not long before you're going to get fed up or you're going to get sunk. And that's not why I trade. I trade to make money, and I train traders and coach traders to help them do the same. So I've been doing this for a long time, and I've trained my brain just recently on this particular pattern, candlestick pattern, and I've taken trades which have been 20-1 reward to risk, and made the profit in 1 minute. 20-1. I mean, just imagine if you put 1% of your trading account capital on the line for that trade, you made 20% in 1 minute. And they do exist, these trades. They're there. And the thing is that you have to have an absolutely perfect setup for these trades. No, it might look like it's going to be all right, or no, it's definitely lined up to be the right sort of trade. Once it's in place, then the trade is on, and that's the type of thing that I'm looking for. So I'm going to take you to the charts now, and I'm going to show you these opportunities on the various time frames. And I can't believe, how many opportunities of these there actually are if you go looking for them. And, I've primed my brain so that it knows when these are likely to occur. And that only happens, you have to wait for candlesticks to close. You have to wait for the EMAs to be in the right position. And there are a number of other factors as well. And I'm going to go into most of these factors for you now. But if you want them all, then they're in my gold system that I've mentioned before. Anyway, Ant's Gold is going to continue in this video, and I'm going to take you to the charts now. All right, this is the 10-minute chart on the Dow from today, and this one and this one are the single candlesticks that provide a huge reward to risk within the one candlestick. You know, obviously they're big bodied candlesticks, big red body, big green body, but what is it about them that gives such good reward to risk? Well, this one opened here, closed here. This one opened here, closed here. Notice that this one went down a little bit, then turned green there, and then started going up and closed right up here. This one started here, just flicked up slightly, and then went down. And big bodied red candlestick here. And there's another one here, really, you know, a tiny little wick at the bottom of the candlestick here, and then a big green body. And these, you know, are superb opportunities. First of all, from a risk and reward position, they are. The risk is defined by, so this one opened here. The risk is it goes red, the candlestick, and then it goes green. At that moment in time, the moment in time that that candlestick went green, you have 2 points of support between your entry and your stop loss that will be just below the low of the candle, which has been put in by this little wick. So this little wick is vital, has to be there. And once that's come in, then we've got a potential trade. Once that goes green, we've got a potential trade, but only if there's the right combination of factors in the market. I'll go into some of those in a minute, but not all of them, because that would be irresponsible of me to give you full information without the warnings. So I'm not going to do that. But I'll show you some of the signals so that you can start looking for them on your charts. This is, as I say, it's primed recognition trading. You are priming decisions on trading by recognizing the decision and recognizing the position of the market and expecting the trading opportunity to take place. And you're doing that, you're setting expectations before the candlestick arrives. So this combination and before this candlestick started was the setup, and then you've got the confirmation, which is put in a little bit of red, turn green. Your risk will be down here. You know, this is 148, and that's the entry there at 160. So 12 points stop, and the exit, if you waited till the end of the candle, is 293. So 130 points with, you know, a 10, 12 point stop. That's 10 to 1 easily. And how good is that? How good is that, you know? Let's have a look at this one. So this combination of factors and the higher time frames led to this big red candlestick here, and it put in a tiny little bit of green to start off with and then went red. So let's say your stop would have gone up here at 328. Your entry was, let's say, here at 322. So you've got a 6 point stop, 7, let's say, with the spread, and you ended the trade here at 170. Well, you can do the maths. That is a huge bit of red body to that candlestick, and the risk was minute. And so just in those two candlesticks, you've got a minimum of 20 to 2, 10 to 1 reward to risk twice. And, you know, that's fantastic Fantastic. That is how to grow your account. These trades are how to grow your account. Let's say, for example, you thought this was going to be the candlestick that you went in on, and it was going to be a red candlestick. And it went, let's say it went green. So it goes green and it goes up here and then starts going red. Is that a good opportunity? No, because your risk is all of this here. Right? So you'd have got 1-to-1, and that is normal and typical for trading opportunities in financial markets. You know, these opportunities don't come around all the time, and more often than not you'll get these type of opportunities where you get 1-to-1, maybe 2-to-1 reward to risk, and you know, and the probability factor as well with the trade has to be right, and these have good probability, and I'll show you what I look for some of the factors of probability in a second. So let's just put some indicators in here, and this will show you how good the trading opportunity really was. Right, so this one here, this bar here closed down here just above the 20 EMA and just below the 80 EMA. I was expecting a bounce here, so when you get a bit of green you're in, and on this particular trade all the factors lined up, and what a fantastic reward to risk. You know, even if you got out here at this previous high, which would have been, you know, fair enough, you're going to be getting 5-6-to-1 reward to risk. This here, these tails on the candlestick, these wicks are too big, so maybe that one went down and then went up, and you'd get, you know, 1, 2, 3-to-1, something like that from that one. But the thing that's wrong with this one is this here. This is the gap between where the candle opened and the river of value. This one was good because it was right next to the river of value. Not perfect, because I'd like it to open just above the river of value. And this one as well was, you know, the tiny little bit, it went green and red down, and this was perfect, whereas this one here went green, big tail, then red, and you're looking at sort of 2-to-1 rather than 20-to-1 reward to risk. Let's have a look at the chart in a little bit more detail. Another opportunity here. This was the best one of the lot, and this one opened just above the 8 EMA, went down, put a tiny tail in, and then went green, and that was a fantastic opportunity trade. This is all on the 10-minute chart. I'm going to switch to the 2-minute chart now, and this is all on the Dow, but you can see these opportunities on, you know, every single chart. Look at this one here. This was brilliant. In price in the river of value, and puts in a little bit of green and then goes red. There's your entry. Okay, it's just above the 8 EMA, but all the other factors were spot on. That one, nice red body, tiny tail on the top, but it's too far from the river of value. You risk it bouncing back up into the river of value. And this was a good one here, way above the river of value here on this candlestick, and it's going back down, tiny tail, and back into the river of value. And again here, the same sort of trade here, back into the river of value. That would have been a good trade. Not part of my system, but this one most definitely was and is. This one had a tiny little tail on it in a downtrend in the river of value, and that's a perfect short. And yes, significant money to be made with these particular trades, guys. This is the Euro US dollar. Euro US dollar. You haven't seen me look at these before, but these, all markets have got these opportunities. You know, this is the 2-hour chart, up from the river of value there, down, tiny little tail. Don't know whether you can see that on the top. Charts are acting in a very strange way at the moment. There, tiny little below the river of value, but right next to it, tiny little wick on it, big red bar. And all the factors are lined up. You can see I've got momentum indicators below. They were already going down at the time that that trade came off. Going to just switch to one chart so that it's easier to see. So that was the 2-hour chart. This is the 10-minute chart, and tiny wick, big body, little bit too far from the EMA, small wick, big body, good opportunity there. Small wick, big body, that's probably a 3/4 to 1 to risk trade, but pretty good in the river of value below the 80 EMA, going down, all good on that particular one. Have a look at the DAX. Okay, this is the 30-minute chart here, and this one here is a good opportunity. This was at 8 o'clock on the open this morning. Tiny wick down the bottom, 30-minute chart, you know, goes green. What's the risk on that one? 185 down to 178, so 7-8 points. And on one candlestick, potential gain is 225, so 40 points. So that's a good reward to risk. And same again on the next candlestick, which opened after a pull back down to near the river of value, very close, and then entry. Now this one here might look like a similar opportunity. Went into the river of value, didn't like it in there, pulled back up and then shot up, but the risk would have potentially been down here, although you could put it just below the 80 MA, and that would mean that you would have the open and the 80 MA as protection, and that would have been a nice long, although you know, I quite like using the wicks on the candlesticks, and that's a too big a wick. But this is what happens when this excuse the charts, please, sorry. This is what happens when the market shouldn't have gone through this river of value here. It shouldn't have gone into it. The momentum was strongly up, and the people who went short in here after that red bar regretted it because the market just went up again. And so these are the type of trades that, if you can spot them and only take charts on this basis, these are the type of trades that, you know, are going to make your day and maybe your life. This is the 1 minute chart. This is the DAX again, and here's a perfect short. Can you see that little there? Can you see that little wick on the top? And then it went red, and massive win. Another one there. So you're getting a good number of these, but they're not on every candlestick. You know, where the wick's too big, where it's not close enough to the, needs to be right next to the EMAs, the river of value, needs to be right next to them. I won't take it unless it is. You know, if it's down here and you've got a nice big gap in there, yeah, you'd have got a winning trade, but then not the ones I'm looking for in there. And you need to be very disciplined with yourself to say, I'm only taking it if it's perfect. And if it's perfect and you get 10 to 1, then oh my goodness, this is going to grow your account. You know, this is really going to grow your account over a period of consistent time. This is a winning strategy for you, as long as you can take the trades and only take these trades. And that's why trading is a discipline. It's an art, it's a science, and it's a discipline as well. And if you're interested in learning the gold system, then give me a shout. But I hope that you found that useful. You've got to cut your losses as soon. If the price on this one, if it went up, came down, turned red, and then went up and made a new high, that's an exit. And whilst sometimes, you know, I don't put a physical stop in the market, I will absolutely get out where I should get out and take my losses, because the loss is peanuts in comparison to the wins, and it's easy to do. If you're sitting and wait all day for the market to come back so you can get out break even, then you probably end up going broke, and I don't want that for you. So you get out where your system tells you to get out, and you need a system that gives you those defined risks, which is what I have. So my name's Anthony Beardsall. Hope you found that useful. Thanks for watching, and I'll see you again on the next one. Cheers for now.